All right. All right. So, who is here to talk about this topic of tokenizing securities in the U.S.? Okay. All right. Great. I don't have a different presentation to give. This is just a time for us to discuss. So we got a couple mics. I'll hand them around. I put up these slides so we can refer to them if that's useful. But let's just basically, do people have thoughts or questions to start us off?
Yeah, so like one of the questions that I had based upon your presentation was like, when we moved from paper trading to the DTC, right, like we saw an efficiency gain in regards to operational work. Yep. My question is like, what are the additional benefits that tokenization brings? Because like, I know a lot of people, their argument is in regards to tokenization will bring liquidity. But like, especially if you're dealing in walled gardens with AML, KYC, whitelist addresses and everything else, I feel like that problem that people are trying to solve with tokenization isn't entirely being addressed. So I'm kind of curious where you see the additional benefits that tokenized securities bring.
It's a wonderful question and a great way to start it off. The question is basically like, well, why do this at all? The current system isn't facing a crisis. So why not just let it keep doing its thing? Crypto can, do its thing over here, and the securities can just stay in the normal system. My answer is basically, the thing you get from the tokens being on chain and being permissionless is you get a degree of freedom and the ability to, put things in smart contracts, basically, right? It's like if we were just talking about people being able to hold the things in self-custody, it's like, okay, that's kind of cool, but like, I don't know, I'm not gonna like spend my life trying to make that happen. But we can just see the preview of what's playing out in DeFi, like everything that people are able to do with smart contracts and the things that they'll continue to invent. You just get like a whole lot of interesting and different financial interactions. They're obviously remixes of things we've seen before. It's, Uniswap is still kind of an exchange, but it's very different, and it has a bunch of power to it, I think. So there's the programmability, and then the other thing is just the freedom and global accessibility, right? Like if these really are tokens that are permissionless that you can hold anywhere, then like right now around the world we have all these different financial markets with like liquidity in different countries, and they're all like permissioned to like, you have to have a passport from this place to trade on this market and so on and so forth. We have all these weird instruments to try to get access to across these markets, but it's like, imagine if all currencies and all financial instruments, all equities, et cetera, all bonds just existed as tokens on, a series of a handful of blockchains. The interoperability of all of that, the efficiency of all that, the accessibility of that would be meaningfully much higher. So it just would truly be easier to transact with people, across the world and get access to different asset classes and so on. Now, our project personally, Reserve, we're excited about it because we want to make tokens that are like an index product that's backed by an index of the whole world economy. And one way to do that is on blockchains. You could try to do it in the traditional system, but I like the freedom approach of doing it that way. So for us, we want to make an index of the world economy, and this is a way to do it.
You mentioned like having these tokenized things be permissionless. Yeah, it certainly opens up a lot of possibilities. A lot of benefits there. Do you believe that will ever really happen? And I won't say ever, but like near term in the next couple of years? Or do you think it will be, I feel like what's happening in the market today is still, if you look at like tokenized treasuries, T-bills, for instance, those things are still like pretty permissioned.
They're actually starting to not be permissioned, which is an interesting fact. So USDM from Mountain and the assets, I think the equities issued by Backed. There's also Swarm Markets is issuing out of Germany. So you have tokenized Apple stock and like a bunch of individual equities. They're all permissionless. They have in their terms of service that US people are not supposed to touch them. And if you go there from a US IP, the website won't load. But you can still buy them on Curve and stuff. And so we're going to get to see that play out with those things being integrated into DeFi protocols. Now, all the DeFi front-end providers are going to have to decide, like, okay, are we going to start having two front ends, one for US and non-US? It's kind of like the whole, Binance US, Binance International type thing. It's going to happen all over again in DeFi maybe. But we are going to get to play around with permissionless versions of them because some companies are bold enough to just be like, yep, no limits on chain, just terms of service, and we'll see what happens.
Yeah, that's that's kind of. I feel like the jury's still out on that one. Like, we'll see what happens. Some people being more bold with their approach than others. And so I was going to ask, kind of, I really appreciated your slide that was like the 4 different approaches, and I think maybe like the middle road, which maybe has its own risks too, is like you have more of these kind of derivative products that are a bit removed from the, the tokenized or like security itself. And maybe there's an
Can you
argument to
expand
be
on
had
that?
there.
How would that work?
Yeah, well, I feel like maybe like Flux, like Ondo Flux would be an example of that. Like to get like a tokenized T-bill, like you still have to be a permissioned actor, pass KYC, hit some like minimum threshold to even invest in the product. But then like someone permissionlessly might get exposure to that. And I think there are questions around that. They're still maybe a bit gray, but like where you talked about Coinbase verifications, like maybe if you could attest that a user's non-US and they could get like someone investing $10 in that product could get that yield that like even if the accredited investor who has to put 100,000 into the fund to get T-bill access.
Yeah, that's an interesting idea. I also love Flux. I have money in Flux. I think that the key thing that I feel like makes Flux work just from like a smell test perspective is, well, I don't know if that's true actually. Okay, it's good. We should think about that.
Yeah.
Right? It's like, could you somehow do the same thing where you have some permissioned class that can hold a tokenized S&P 500 index or something, and then deposit it into some protocol, and someone else can, withdraw some token. The thing is, if it's just a wrapped version of the same thing, then it's like that's clearly just running around the rules.
Right.
You know.
I'd
So
argue
with Flux, at least it's a different asset. It's just like, oh, this is this DeFi asset. So I feel like there's a tension there where if you want to create something that just does perfectly represent the value of a bond or an equity, I'm not quite sure if you can do it that way, but I think that's a cool direction.
Yeah, I agree. Like, there's a lot of risk there. I'd argue Maker is maybe the stronger case of that. Like, there's certainly securities
but with
behind
the
Maker,
CDP model or something like that, you're maybe getting some of the yield indirectly paid, but you're not getting direct exposure to the asset itself,
correct.
which is what I hope we can get.
Okay.
So.
Yeah, I guess, yeah, still an open question. It seems, like you said, at least $100 million question to how you solve that.
Yeah, so one of the questions that I have from the tokenized security perspective is like, are the tokens actually a perfected interest in the underlying security? Because I'm assuming that it's probably still going to be sitting with a broker-dealer somewhere and still registered in DTC's name.
So at this point, all of these tokens that are being issued, they're going through this system. They're being held by a broker. Like the one with Swarm Markets, it's being held by a German bank. So there's maybe an American broker and then a further sort of relationship there. It's like a German bank that's holding it. So it's not at this level, definitely not at this level. And by the way, I think this is the way to start because it's so simple. It's just a single company that has to deal with that tech stack and get regulatory approval. But if this works, it could move up the stack. The transfer agents could start issuing tokens directly. The companies, maybe one day the company, incorporates and just creates its own smart contract, and you don't even need a transfer agent. Like, this is all sort of like outdated and not necessary if you truly are comfortable depending on the token, the smart contract token as your database for who owns the thing. But I just don't think that that's feasible to start off with. I think you have to start off on this level.
Yeah, because I don't know if you're familiar with the project with the ASX that DAH was working on in regards to working directly with the transfer agents over there, but everything was running in a more permissioned manner. I feel like they've messed a lot of stuff up. But I think for me, like the biggest issue with the transfer agents is just getting them to issue. Because for them, like since they're fully regulated, they're not going to want to issue to anyone that's not fully permissioned.
Right.
And getting into that chain to make that work. Because like we were having conversations with CompuShare way back in the day to try to see if we could get them to move over, and it was just like explaining to them the entire process.
And this is, I've been focused, like I said in the talk, to try to figure out like, will the existing system end up doing something like this? And the answer is no. Even though there's tons of energy looking into tokenization, it always goes the direction of some sort of permissioned chain to make clearing and settlement more efficient or safer or whatever amongst those parties, which can be maybe cool. I actually don't really know how well that will work out. But yeah, there's just no incentive really to do anything like this, it seems.
And one other point that you brought up in regards to like double wrap tokens, I feel like that is kind of like the go-to move in crypto at this point in time. Like whenever we see regulation, is let's just continue to throw wrappers on it because we can technologically innovate faster than the legal elements can keep up.
Right.
But I know that this ended up hurting Binance and Paxos, where they ended up double wrapping BUSD. There was that $1 billion misflow, and I think that's what led the SEC to.
Yeah, I think DeFi wrappings with rules are better than centralized wrappings with multi-sigs where you can just sort of print thin air. We had a question in the back. Did you still have a comment?
No, it was just more a comment because I've been working with this topic from Europe, so I just wanted to bring some light when it comes to
Yep.
tokenization.
Taylor, do you want to hand the mic?
It was just basically a comment because similar to what you presented, like the framework for tokenization of Liechtenstein is already quite advanced of this, right? So they're even doing tokenization of IP rights. And I think that they have one of the most advanced systems that I have seen when it comes to regulation because the transfer of the token already transferred the IP right.
Really?
So it really like shows that there is at least like some jurisdictions that want to move in this direction. And if you see Qatar, for example, they copy paste what Liechtenstein is doing when it comes to tokenization. So it's different approach to the one that you have here.
And so
here
do
in
those
US.
tokens have no permissions? They can be transferred to anybody?
It can be transferred to anybody, but like you have like certain validators. So in the moment that you generate the token, you have like some entities that are trustees entities,
Yeah.
and they're the ones that do like the KYC process and like do all the verification, the certificate, and then later on is tokenized. And whatever you transfer it, like once the token is transferred, the ownership is transferred as well.
So a question I have with Liechtenstein, and there's this case in Germany, why is it that European financial regulators are okay with tokens existing in this way, securities existing as tokens without KYC? Is it just like an accidental quirk of their laws that it happens to be allowed, or is it an overall cultural attitude? Like, why is that being permitted? Like, I was honestly surprised that in the U.S. we permitted, fiat-backed stablecoins without KYC. 5 years ago, I thought, I'm not sure that that's going to be allowed. And somehow it's made it through. But yeah, why is it in Europe okay on the level of securities?
Actually, I was presenting that yesterday at the main event, like how there's like the regulatory approach on Europe, because I work basically on that, like we're based in Germany. But I think that the difference is that you have a unified market, and then you just like need to find different ways in which at the national level is going to work. Also with the European regulations, and what has been happening in the last couple of years is
Wait,
that
I didn't quite catch that. What was what's the difference?
You have the national jurisdictions, and then you have also like the Commission, the Parliament, and the Council, like bringing like overall legislation, right? So when it comes to AML, this is like it comes from like the Commission, and then the national levels like need to adopt and like adjust. And because of this system at the European level, we have a lot of advocacy groups that are quite big, like in ADPA, Blockchain for Europe, the European Crypto Initiative, and they're really active. Like I call them the watchdogs, basically. They're like, they have like people in Brussels, like checking every single piece of legislation that is coming from the Commission, like proposed by the Commission and the Parliament.
Yep.
And then they are just like all the time they're talking to the regulator. So they are educating quite a lot the regulator on how it works. And there is initiative to use cases. So EPSI is one of the biggest one, the European Blockchain Infrastructure, I think is the name.
Okay.
And this is coming funding by the Commission to test how blockchain can be implemented, not only in the financial sector, but other ways that can impact and make Europe more attractive to startups, right? So it's different mindset.
Yeah, that mindset's really interesting because we have the same thing in the US in terms of industry groups in DC checking every little line and always trying to educate and move things in the right direction, but still a different result. So, yeah.
Well, the difference might be that the use cases that are being financed by the Commission with Horizon 2020 are not only focusing on the financial market, right? And here you have like less resistance because you're also like not lobbying banks. So when you are actually talking about like financial inclusion, climate, how to push forward the Green Deal, what is the name? Carbon credits and all of this,
Right.
they are more open to hear about like these digital identities. In Europe is huge. Like we have the IDAS.
Yeah.
So how we integrate certificates. So it's not only like the credential of the ID, but also like educational credentials and all of this. So it's different approaches that have been taken.
Cool. Thank you. Other questions, comments, ideas?
I got a question. So with a lot of these tokens backed by assets that are off-chain, sort of what are your thoughts on like sort of like the trust aspect of it? Like if I were to buy a token that's backed by something that's on-chain or crypto native, I can verify all of that end to end with certainty, right? But if there's something that's off-chain, especially if you want to take this like global, right? For somebody in, for example, in a different country that buys something that's backed by something in the U.S. who may not be familiar with how U.S. securities, all of that stuff is handled, what do you think the process there?
Well, I guess the way I think about it with this idea is that today, in the normal system, we already trust that our brokers are not going to screw us over, and we trust that the DTC is not going to like mess up its records and screw over the brokers, and we trust that the transfer agents are not going to like screw over the DTC and like, you know, transfer the things, right? It's this like multi-layer database that we are implicitly trusting. And so with this approach, it's like, well, you're still trusting, you know, this would be probably a trust company, so regulated like a bank, which was actually a key part of the foundation of the DTC. That committee that came together decided it needs to be regulated as a bank so that all of the parties in the system can trust that it's not going to abscond with those assets. And actually, if I understand the story correctly, the New York Stock Exchange had already tried to do an electronic tracking mechanism before the DTC. And it wasn't regulated like a bank, and I think that's a part of why people weren't willing to switch to it. They're like, we don't want to put our certificates, you know, with this random company that's held by the New York Stock Exchange. That's just a private company, and so having this be like, you know, so in a word, the answer to your question is regulation. Like, we don't like regulation, but we also do like regulation, right? You know, regulations on banks do generally prevent them from taking your assets and running away. So if this is regulated as a trust, like a bank, then I think that's pretty solid. But also, that's just a starting point. You can, like I said, I think over time eliminate layers, right? These things instead could be issued directly by the transfer agents, and so then you cut out one layer, or eventually they could be issued directly by the companies, or you know, whether this is equity issued by a company or you know, like a mutual fund asset issued directly by the company. If there are like standard contracts that have been in use for 5 or 10 years, you know, maybe these companies could administer them directly. Maybe when you create a company, you create a token that represents as equity, and the token just is the equity. It's not a representation of anything else. Whoever has the token, it's like a, you know, a bearer instrument. By the way, people think that bearer bonds are illegal in the US, but they're actually not. They were never illegalized, so you can have a bond in the US where whoever holds the bond has the rights to the payout. It's just that they were made effectively illegal by adding a 1% interest tax. So if you issue a bearer bond as the issuer, you have to pay 1% in tax on that to the government. But yeah, so you could eventually get to like a bearer instrument issued directly by the company, and you still have to trust that the company is going to issue its dividends to whoever holds that equity. So there's still an element of trust because we're talking about stuff in meat space, but I think that that's the absolute best we could get to, and that would be the end game, you know, 15, 20 years from now.
So you think crypto native people will eventually trust that model? And
I think everyone will be crypto native if something like this gets big enough and we all, you know, experience it and watch it play out for 25 years.
awesome, thank you.
All right, I think a bunch of the people here are here for the next topic, so let's hand the room over to them. Thank you all for coming. If you haven't joined the Telegram group already to talk about this, do that before I unplug my computer, and we can continue the conversation. Thanks.